Welcome back, and as we have been laying out very extensively on this channel, some Bitcoin whales may be selling according to blockchain data. And this is from Citigroup, the bank that is basically saying the same thing that we have been analyzing and going through for months now. Since August of 2025, I have been laying out that this is one big bull trap. And the bulls don't even see that they're getting trapped into their positions. As we are now at the end stages of the Bitcoin halving cycle, at least the bull market phase of the 18 months after the Bitcoin halving, which historically in every single cycle before has determined that that is the top of the market. But this cycle is different according to some. The bulls think it's different because Wall Street has been involved, Wall Street is buying. But guys, they have been buying since before the Bitcoin halving. And now we are basically 2 years since they started buying. And there's people who think that we're never going to go through a corrective phase because Michael Saylor said this, or we have the AI, pivot with the Bitcoin mining companies. In today's video, we're going to be exploring all of that. We're going to talk about the bull trap and how all the bulls are getting trapped into their positions. And the lower we go, the more trapped in they get. And as market analyst, I'm not a bull or a bear. I'm neutral on where the markets are. But I'm not neutral on where the markets are going because based on the data that we have been covering since the middle of 2025, once again, we are correct. The bull trap is underway. Let's get right into today's video. We're also going to be talking about quantum computing and AI and the Bitcoin treasury companies. Make sure you guys are subscribed to this channel. We upload every single day of the year to bring you the latest happening in the financial world. Also, hit this thumbs up button. That way it lets me and YouTube know you guys enjoy this kind of content. Let's get into today's video. So what exactly is a bull trap? Well, a bull trap is when the bulls think that we are moving into bullish sentiment, that we're moving higher, that there's no possible correction or downtrend. Well, the Federal Reserve laid this out back in August of 2025, going into September. And I posted, just type in the Cryptoviser bull trap right here on YouTube, and you'll see that video. Jerome Powell is in the thumbnail. In my view, Jerome Powell laid it out because crypto is not immune to the macro conditions in the market. And so this is what Citigroup is saying, that some whales may be selling. It's not that they may be selling, they are selling. And that's what on-chain data is showing you. The Bitcoin treasury companies like Sequence, SQNS on the stock market just announced the other day in November of 2025 at the tippy top of the market, guys. They announced that they sold 970 Bitcoin, right? Now, granted, in the grand scheme of all of the Bitcoin buying, 970 Bitcoin being sold is not that big of a deal, but it is that big of a deal in the thesis that you never sell your Bitcoin, that these Bitcoin treasury companies are never going to sell. Because once one starts to sell, it gives the green light to the others that they can and they will do it, especially when they're publicly traded companies. Because you have companies like Nakamoto, which have a negative MNAV that are down 97% just in the last 6 months. They have no cash flow, no revenue streams, and only an outlook of further dilution because they want to purchase some of these Bitcoin conference companies to get some cash flow going. But they're going to be doing that through dilution, through share issuance. That is a net negative for these companies. But again, the macro of what is going on in the markets, and we're about to get into the AI bubble, the quantum bubble, because this, I think, is all related. Because it's not just Bitcoin that's in euphoric highs. It's not just the Bitcoin treasury companies like Sequence that are in euphoric highs. It's the whole market. Everything is at all-time record highs for the most part. And what are we seeing? We're starting to see a breakdown, right? We talked about the food companies recently that have come down, 80% over the last year. I just saw DoorDash just posted their earnings, came down significantly. Meta is coming down significantly. But let's get into this. Citi, the bank, says that crypto's weakness stems from slowing ETF flows and fading risk appetite. Now, a little bit later in the video, we're actually going to be hearing from the founder of Hyperliquid, which is basically hyperliquidation, right? The DEX, which allows, extensive derivative trading on crypto, which is a net negative in the longer term for crypto. But He's not worried about a black swan event. He's worried about a gradual, slow decline in the markets. And this is what we are seeing: slowing ETF flows, fading risk appetite, right? Every day, you see more and more people saying, I'm out of the market. I'm closing my positions out. I'm no longer fully bullish. I'm closing my puts. I mean, my calls. I'm starting to buy puts. This is all fading risk appetite. People are pulling out of the market slowly or moving into other areas of the market. And there's a lot of people that are getting trapped in because they won't change their thesis. They won't change based on the data that they're seeing in the market. And this is a huge issue, not for me, not for you, but for the market, right? Because these bulls are going to keep pushing this narrative longer and longer and just prolonging the downtrend, right? If everybody flipped and said, okay, we're bearish, we would hit the bottom of the market very, very quickly and rapidly. But the longer it takes these people to pivot and they keep buying the market up and saying, oh no, this is so bullish. Oh my God, everything's bullish. Everything's bullish. The market's going down. It's bullish. It's going sideways. It's bullish. It's going up. It's bullish. Credit risk, bullish. Everything is bullish, right? That's what the bulls are saying, at least. And in my view, especially when we look at the psychological market charts, we are at the end of complacency now, right? Because now people are capitulating, right? The Bitcoin treasury companies and Ethereum treasury companies are starting to sell their crypto. And that may not mean anything for the companies that keep buying their crypto, but in the whole overall market, it's a bull trap. It's an absolute bull trap, and we've been laying this out for months. Anyway, back to this. So Wall Street Bank Citi has said that the latest bout of crypto market weakness comes despite buoyant equity performance, with October sharp liquidations leaving a dent in investor confidence. And remember the flash crash that happened at the beginning of October. I told my viewers on this channel that was a warning. It was probably the last warning to get the F out of the market. But the bulls, no, Cryptoviser, that's bullish. Look, the market supported itself immediately. It's like, okay. Anyway, this sell-off curtailed risk-taking not only among levered crypto traders, but also among the newer spot exchange-traded fund investors who have since pulled back, according to analysts at the bank. Flows into spot Bitcoin ETFs have slowed sharply in recent weeks, undermining what analysts call the critical pillar of support for their supportive outlook. The bank's forecasts assume steady ETF flows as financial advisors and other investors gradually add Bitcoin exposure. But on-chain data also adds caution. The analysts noted that large Bitcoin holders have been shrinking in a number, while smaller retail wallets continue to rise. The smart money has been selling. I keep telling my viewers that. Go to my YouTube page, youtube.com/thecryptoviser, and click on the posts tab. Scroll down a little bit and you'll see a poll that says, are you buying, selling, or not doing anything? I also have a quiz that says, have the Bitcoin whales sold in July of 2025? That's when all these Bitcoin treasury companies popped up. More than 50% at this point are said, no, the whales are not selling. And it's like, these people are brain dead. They don't understand what is going on in the market. The way that these Bitcoin treasury companies acquired Bitcoin is through these large whales who offloaded and took the cash or took the stock and then offloaded the stock to get the cash. You were the exit liquidity. The Bitcoin treasury companies were the exit liquidity. And there's people like, no, Cryptoviser, that's not exactly what happened. It's like, then what the F happened? Where did they get all that Bitcoin from? They didn't get it from you. They didn't just get it from the air. They got it from these large whales who have, yes, they've been selling. For months now, they've been selling. But a lot of people don't want to believe that because it doesn't go within their bull thesis. So where is the Bitcoin coming from that all of these companies are buying? Anyway, like I said, guys, on this channel, we're here to make money. It doesn't matter whether you're right, whether I'm right. What matters is that our portfolio matches what the market is doing. And we are trading the market in front of us, not the market that we want. The bulls are getting trapped in. And it's not just in crypto. Jensen Huang, who is the CEO of NVIDIA, has now softened his China will win the AI race remark to the Financial Times. Now, just the other day, he told the Financial Times that China is going to win the AI race, only to release a softer statement soon after. The comments which couldn't be verified independently, represent his stark warning to the US that they're at risk of losing their global lead in AI technologies. Now, several hours after that report was published, NVIDIA issued a statement, separate statement, saying, as I have long said, China is nanoseconds behind America in AI. It's vital that America wins the race ahead and winning developers worldwide. And so just these statements, right, from the biggest company in the history of the world, right? NVIDIA is worth over $5 trillion. This is a huge risk factor because even if people think that China is ahead, number one, this could push, the regulators to ease up a little bit, more money to flow in. I get that. But this could be the bubble pop for AI because there's a lot of conversation that AI is in a bubble, right? It's not going anywhere, but the valuations of these companies may be super elevated. And once the bubble pops in the largest company in the history of the planet, $5 trillion, more than double the market cap of Bitcoin, everything else will pop as well, even if it's just temporarily, right? But again, the more bulls there are in the market, the longer it takes to draw down and create a bottom, create a floor for the market, because they just continue to buy up the market, saying, no, there's no problem. There's no bubble. What are you talking about, bubble? There's no bubble. The Bitcoin's going to go up forever. There's going to be no bear market. Michael Saylor said that. They keep saying this and keep buying up the market so they don't let the market correct to its fair value. And the longer that takes to get to that point, the longer that we're going to be in a downtrend. But again, we can make money in that downtrend. We can short the market. We can buy puts on the market. We can buy ETFs that are inverse ETFs on the market. There's many different ways to play it. Or you just kind of sit out and wait until a floor is formed, and then we can buy that bottom of the market while the bulls have run out of money and they're all significantly underwater. That's the bull trap. That is the bull trap. And by the way, it's not just, these warnings are not just coming from NVIDIA. It's also coming from AI, which is now walking back comments about the government support for their AI spending. OpenAI's chief financial officer mentioned a potential government backstop for AI financing the same day that Jensen Huang made those comments about China, but later said her choice of words were muddied the point of what she was trying to say. So the chief financial officer said at a live event that the ChatGPT creator was looking for an ecosystem of banks, private equity, and maybe even governmental partners as she mused about ways the government can come to bear. Those arrangements, she said, can really drop the cost of financing, but also increase the loan to value so that the amount of debt you take on top of the equity portion. When asked if she meant federal subsidy, she said she was referring to the backstop guarantee that allows the financing to happen. And effectively, a backstop is like a guarantee that, if they basically, it's a backstop, right? It's like the government will back the debt that they're taking out or the money that they're raising, which whether they do that or not, again, I'm a neutral analyst in this market. Like, it doesn't matter whether they do it or not. The point is that they're now asking for, I think the numbers were being talked about like $1 trillion that they were asking for a backstop of, right? And people were like, whoa, you're a private company. If you're raising this money because you're saying you're going to do this, then you need to do it, or you need to have the consequence of not doing it and having investors not very happy with you, right? But why should the government backstop that? She then said she wanted to clarify her comments, saying OpenAI is not seeking a government backstop for infrastructure commitments. She said she was rather making the point that American strength and technology will come from building real industrial capacity, which requires the private sector and government to play their part. I mean, they're basically saying that they're going to be worth $1 trillion if they IPO, and they want government to backstop this. NVIDIA, remember, it went from 95% market share in China to 0% because of the trade war going on. And so in my view, this is bubble popping. This is confidence. People are going to start pulling their money out and say, whoa. You want a backstop? So that means that our money is just going to what? right? The investment is going to what? Do you really have any product? How far are we out from it? And that really brings us to the quantum conversation. Because in quantum, the quantum stocks have been going up significantly. And now look at the Ionic earnings. Ionic, which is a quantum computing company, just released their earnings at in November 2025, saying that their earnings per share were negative $3.58 versus negative 44 cents expected. That's over $3 in the negative, more than people expected they were going to have in earnings per share. The revenue was $40 million for the quarter versus 27 million expected. I want you guys to think about that, right? These quantum companies, Ionic, when I'm recording this video, let's refresh this, is worth $20 billion. Got to get Dr. Evil in on that. $20 billion. So Ionic is worth $20 billion, and in one quarter they made $40 million, earnings per share negative $3.58. And by the way, if you look at their previous quarters, everything is in the negative. Every single quarter earnings are in the negative. And we also just heard from the Rigetti CEO, who owns 0 shares in his company. He sold them all in May of 2025. And Rigetti, by the way, is another quantum computing company. And basically in this video, he interviewed with Yahoo Finance. He said, sales don't matter to us. We're 3 to 5 years away from quantum advantage and 7 to 9 years from fault-tolerant quantum computers. This effectively means that they're nowhere near where they need to be in terms of quantum. Like there's no product, right? There's no money to be made. This is the same kind of situation going on in AI. They're not making any money, but they're raising a lot of money to advance the technology, which obviously makes sense, and hopefully that they're able to succeed here, right? But the point is there an overvaluation of the companies from a stock market perspective, right? And a lot of that comes from just the early investments. People just want to own the stock at any price. And that creates bubbles. And then the bubble pops and the prices go down. And sometimes you get collapses. Companies that said that they were going to be able to do things couldn't do it. This happens in crypto and stocks, okay? It's not just stocks and it's not just crypto. It's both. It's the whole financial markets. But we as investors need to understand how this all works, okay? Because if we don't, we just listen to the influencers that say, but Cryptoviser, the M2 money supply is going up, so that means that Bitcoin has to go up. It's like, no. The M2 money supply always goes up during corrective phases, during bull markets, during bear markets. It doesn't matter. It's always going to go up. People say, yeah, but Cryptoviser, this cycle is different. We are not going to have a bear market because Michael Saylor X, Y, and Z. Yep, okay, you keep saying that. You are who we on this channel are trading against, right? Because we understand how these market cycles work. We understand the Bitcoin halving cycle. We understand that the sentiment in the market is now, wait, AI is asking for what? AI is saying what? They're basically admitting that we're not as advanced as we were in AI, that we're not that close to AGI, that there's going to need trillions and trillions of more dollars just to get to the basic levels that we need. And this is counter where the narrative is. And so when you have the narrative in one place and the actuality of what the markets are showing, right, what the data is showing in another place, the bubble pops. And once the bubble pops, that's it. That's it. But the bulls get trapped in. That's the bull trap. And that brings us to the crypto markets. And also the related crypto Bitcoin mining companies that pivoted to AI, right? Like Iris Energy. Iris Energy has made great partnerships, right? Great agreements with some of the large AI companies for power, for the GPU leasage and all of this. This is really good. And obviously you can see from the stock, it's gone up over 10x just in the last 6 months. But what if the bubbles are popping? Now people are going to say, no, Cryptoviser, there's no way the bubbles are popping. Okay, I mean, maybe not. But at the end of the day, we already, buy the rumor, sell the news. We already know Iris Energy has all of these agreements. They made an agreement with Microsoft. They made an agreement with Google. All of these announcements, that was the news. We bought the rumor, 10x up. And now you're going to see sideways trading for a while, which is literally what we've been seeing over the last month. It's kind of sideways trading, a little bit higher, but both basically sideways trading. And what happens after sideways trading? What happens after the parabolic move to the upside? After we hit euphoria? Euphoria is the news. Microsoft has an agreement with Iris Energy. Google has an agreement with Iris Energy. What else? You think they're going to come out with 10 more announcements of agreements with multi-billion-dollar partnerships? Highly unlikely. Okay, highly unlikely. Because that would just be eating into their other revenue streams, and they're not going to do that. And so after the euphoria, we go into complacency. And once we're out of complacency, the market corrects. People take profits. And just because you bought at $70 Iris Energy doesn't mean that the people who bought at $7 Iris Energy are not going to take profits. They are. 100% they are. And the market shows us that they are doing that. And so all of these stocks, all of these crypto-related plays, I think there's a correlation here. And this explains the bull trap. And a lot of people are getting trapped in their positions because they're unable to see this. They may be up 10x already, 15x. And they're like, well, we're not in euphoria. No way. I'm not selling. We're going to $100. What is that called? Greed. When others are greedy, you get fearful. They're not getting fearful. They're getting more greedy. And so they want to be greedy. We get fearful. We get out. We short. We wait. We buy puts. We watch. And that's it. I mean, we have been talking about this since the middle of the year with MicroStrategy, when they created Stretch, Strike, Strive, Stride, all of these other things, right, for MicroStrategy. We're going to talk about MicroStrategy in a few minutes here, but we were talking about over the last 6 months, like they topped out in the middle of the year when we called the top of the market. People are like, Cryptoviser, you're just being a bear. You're fudding. There's no way we're at the bottom of the top of the market. Well, we were right. And not only were we right, but we were positioning our portfolios appropriately. And so anybody who's been buying MicroStrategy since that time, they're down 47%. Us, on the other hand, on this channel, we are up significantly, right? And why? Well, we're not just talking. We're not just saying, oh, that was the top of the market. We're positioning our portfolios appropriately. And so the bulls, they're now fully trapped into MicroStrategy, right? If they sell now, they're down $214 per share since the middle of the year. And people still in the comments, no, Cryptoviser, we're going to hit $1,000. No fucking way. And this brings us to the crypto black swan. Now, the Hyperliquid founder has said the real risk isn't a black swan event, it's marginalization. He stated in an interview, and we'll play this interview, it's about 2 minutes long, at the Singapore Token 2049 conference in the middle of October, saying Hyperliquid worries more about a slow decline than a black swan event. If Hyperliquid fails, it will likely not be because of the protocol itself, but because it didn't create something valuable for the world, right? Long-term, sustainable product, not just for the bull market, not just for people betting on the market, but also something that they can create that can work in a bear market, that can work on the downtrend. He added that DeFi still has a long road ahead, saying it should reduce reliance on off-chain assumptions such as price or asset backing and refocus on a chain consistency and build long-term products. Well, I would agree. Let's listen to this video. We're going to play it a little bit faster than regular speed. And I want to know what you guys think down below in the comments of this video. And don't forget to give this video a free thumbs up, because thumbs up are free. Crypto is not. Let's listen in. Hyper Liquidation founder.
For your own protocol, where do you expect that next big sort of uncharted risk to come from DeFi? Jeff, what do you worry about the most for the Hyperliquid ecosystem?
I think the biggest thing is, in my mind, like execution risk. It's not, I think like it's...
Oh, that doesn't count. No, I mean like a risk.
No, but I'm being serious here. Like it's easy to have like flowery images of kind of like black swan events, but if you really think about why things die in the real world, not to be too morbid, but like by and large, like there are crazy accidents and whatever, but like by and large, people suffer from, just like bad health. It's like really boring, but it's like, if you look at statistically what happens, like it's kind of like a slow, painful death. And like, I think that is in my mind the biggest risk. I mean, obviously they're kind of, like you said, they're kind of like blow up risks. And like from that perspective, I think we try to guarantee like mathematical solvency in how the protocol works, as opposed to some underlying sort of off-chain assumption about something having backing or having some price or something like that. Like, I don't think the solvency of any system, any well-designed system, should depend on things like that. So and that kind of points back to the like DeFi or like on-chain vision being something that's like relatively self-contained and mathematically consistent. And so there's that side. But I think like by and large, like if Hyperliquid fails, I think it will not be. I think like by and large it will likely be because we as a community like didn't build something of real value for the world. I think like as things grow, it's easy to it's easy to kind of either rest on your laurels and think we got to protect what is here, or think you kind of made it, and like this kind of that kind of hubris is it's a very human thing to feel. But I think that's in my mind the biggest risk. And maybe that.
And this is exactly what we see in a lot of cryptos. There's a lot of cryptos from the last cycle, even from this cycle, that will never recover and have never recovered from their all-time record high. They will never hit that number ever again. It's just a slow drain, right? We saw this with Cardano. Cardano, one of the reasons Cardano has not hit its all-time record high of $3.10 or even close to that from the previous cycle is because they continue to dilute the coin by releasing all these coins from the treasury to projects that are, quote, building on the protocol, yet we have no viable product, no actual adoption, no major partnerships or anything like that on the Cardano blockchain. So effectively, they're draining the entire ecosystem on this belief that, well, maybe this time, maybe next month, maybe this funding round, we'll get a product that actually gets us interoperability or a major company wanting to use it. And it's a lot of different cryptos, right? A lot of cryptos have not reached their all-time record highs from previous cycles, or they've hit it and gone a little bit higher, but that's it. I mean, look at Solana. It went briefly over $260 and then came right back down, right? And what do we have from Solana this cycle? Any viable products that are really for the longer term use cases and banking and stuff like that? Absolutely not. It's been meme coins and celebrity coins. So that's the way that we're looking at the market, right? And this user said on X, he said, I really think the invalidation of the 4-year cycle is a huge catalyst. Excuse me? There's no invalidation of the 4-year cycle. We'll get to that in a minute. He said it's most widely held belief in our entire space. Tens, maybe hundreds of billions have been sold off because of it. The longer we hold above $100,000 in Bitcoin, the more it proves them wrong and the more that dollars re-enter. Well, I completely disagree. And one of the reasons I disagree is because, number one, the Bitcoin halving chart clearly shows us that we're after the 18 months after the Bitcoin halving. And number two, the bulls are trapped in, right? So this whole, we go under 100,000, then we pop above 100,000. This is the bulls trying to defend the price. But the bulls will run out of money, right? Because the bears or the neutral people in the market, they're just holding cash, or potentially betting against the Bitcoin price going higher. So they're making money regardless. The bulls have to keep putting more and more money in just to hold briefly and slightly over $100,000, right? Now, in the longer term, I do think that we're going to go much higher than $100,000. But again, we have to go down first. And basically from every cycle before, from the top of the market to the bottom of the market is basically about 1 year. And so if the top of the market was in October of 2025, $126,000, well, we got another year to go. And if we get a higher high after in November or December of 2025, well, then we got to wait another year to hit the bottom of the market. And so it's going to be a slow drain of all of these protocols, of all of, like, people say on this channel, they're like, Cryptoviser, this crypto is going to go much higher. And I'm like, based on what? Based on what? Like, there's no adoption, there's no usage of these protocols, there's no integration, right? The banks are creating their own blockchains. The banks are using stablecoin blockchains. The stablecoins, there's no investment of availability really in stablecoins. I mean, there's no way the price is going to go up. And most of these new coins that pop off, it's just a liquidity drain at some point. I mean, look at Sui, look at Solana, look at Cardano. There is a liquidity drain where they just keep sucking as much as they can out of the market and they don't create any real value. We've been promised for years the banks are going to use Solana, the banks are going to use Ethereum. They're not. They're not. They may use some integrations like Chainlink, which connect to Ethereum for some DeFi usage. And over the course of time, I think there will be more usage of Ethereum. But all of these other coins, which is basically everything besides Bitcoin and Ethereum, there's nothing. It's all been promise and promise and promise and under-deliver and underwhelming execution, like complete underwhelming execution. And so most of crypto is just based on a puff of air, right? And listen, at the end of the day, there is real building, there is real integration, there is real technology, but it's nowhere near the level that we're seeing that is going to be worth trillions of dollars anytime soon. Now, you may disagree with that, but I mean, you're wrong. Anyway, I'm just joking. Kind of. Anyway, we just heard this on X from the Wall Street Bets Reddit forum that a 23-year-old is going all in on Strive, the ticker name ASST, with $109,000. And you can see here 100% portfolio diversification, about $100,000, $110,000, 32,000 shares of ASST. And why is that? Like, what is Strive? Well, Strive is the company that just purchased Semler Scientific, which is another Bitcoin treasury company. But as you guys can see over the last 6 months, 90% decline in the price, 90%. But then you have influencers like Mike Alfred, who said, I wasn't planning on buying more ASST over $1.30, but I may have to if I want to get up to 1.5 million shares. The company is executing even better than I expected and likely has 1 to 2 aces up its sleeve that the market isn't thinking about now. Best in class, may chase it if necessary. Well, here's the deal. Mike Alfred is playing a very different game than most of retail, especially, the younger generation that don't really understand how these stocks and markets work, right? Big difference. Big difference. And he's probably getting paid on the back end in certain circumstances, right? He's on certain boards as advisors. Do they get paid? I don't know. But at the end of the day, he's playing a different game than just the everyday person, okay? Strive is a Bitcoin treasury company. Okay, if we look at their earnings just look at their yearly. Last year, they made $3.6 million. The whole year, $3.6 million. And they lost $22 million. Same thing the year before, okay? So they're not making any money. And buying a Bitcoin treasury company, they're not going to make any money either, especially if the Bitcoin price drops by 50%. What's going to happen to the stock? What's going to happen to the valuation of these companies? They're going much lower, okay? That doesn't mean that there's not going to be an opportunity to buy in. But I mean, buying in at this valuation, what is the buy price? The average cost is $3.41. Okay, ASST right now, that person's down 50% right now. 50%. Well, actually more than 50%, but we'll say 50%. Okay, and Micro to Macro said once ASST turns to $1.75 into support, we have nothing but air until the 250-ish zone. And 2, it should be very quick if he had to guess. No, guys. Absolutely not. Guys, what is the basis for MicroStrategy to go higher? What is the basis for Strive to go higher, for Nakamoto to go higher, any of these Bitcoin treasury or Ethereum treasury companies? It's for the Bitcoin price to go higher. But if we're rotating into a bear market, which we are, every single one of these bulls in all of these treasury companies, they're going to get wrecked. They are in the bull trap and they keep getting further into it by buying more and getting more bullish on it. Even though the trend in Bitcoin is down, the trend in MicroStrategy is down, the trend in every single one of these Ethereum or Bitcoin treasury companies is down. And not only is it down, but they have capitulated as Sequin sold their Bitcoin. ETHZilla sold their Ethereum, maybe not all of it, but they sold. And that goes counter to this entire cycle's vision of these companies buying and never selling. And so once one sells, more will sell. That's going to cause more price pressure to the downside. That's going to accelerate more companies doing it. And it's going to force some of the companies that aren't doing it in a bear market to actually do it. And so we may see from these Bitcoin treasury companies and Ethereum treasury companies something very similar to what we saw with the Bitcoin mining companies in the previous cycle, where like literally in the last bear market, the Bitcoin mining companies sold the bottom of the market because they had to. They weren't making money. Energy prices were higher and they had to sell. And so they sold the bottom of the market. This time around, right, the Bitcoin mining companies pivoted to AI. So they're at least going to hopefully make some revenue. And obviously with the energy, regardless of if AI bubble popped or not, the country needs more energy. So they're going to still make some type of cash flow. But the Bitcoin mining companies of this cycle, in terms of price decline and selling the bottom, could potentially be these Bitcoin treasury companies. And it's already underway. So if you are a bull in the market, I would definitely recommend rethinking, reassessing your portfolio analysis. Look at the Bitcoin halving tracker, look at the psychological market charts, understand this cycle is not different. There is going to be a bear market. And I think it's just really foolish to think anything otherwise. And you can still be bullish while protecting your portfolio. Anyway, I want to know what you guys think down below in the comments of this video. Don't forget to give this video a free thumbs up. Hit that subscribe button. We upload every single day to bring you the latest happening in the financial world. Other than that, I'll see you on the next one. Thanks for watching.